Hello, fellow risk takers, and welcome to my worst investment ever. Stories of loss to keep you winning. In our community, we know that to win in investing, you must take risk, but to win big, you've got to reduce it. Ladies and gentlemen, I'm on a mission to help 1 million people reduce risk in their lives. And I want to thank my listeners in Canada, specifically Ontario, Canada, today for joining in. Fellow risk takers, this is your worst podcast host, Andrew Stotz from A Stotz Academy. And I'm here with featured guest, Rizwan Memon. Are you ready to join the mission?
Absolutely. Absolutely.
Absolutely. Well, let me introduce you to the audience. So Rizwan is the founder and president of Riz International, Canada-based financial education firm, helping thousands of people across the globe maximize financial success through trading. Having 17 years of experience behind him, Rizwan is a seasoned expert in 8-figure stocks and option trading. Starting at 16 with just $5,000, he has made $10.5 million in trading profits. With 123,000 followers on Instagram and vast global audience tuned into his trading advice, Rizwan has established himself as a voice of authority in the financial market. In 2023, he secured solid returns of 70% on his 7-figure trading account. Rizwan, take a minute and tell us about the unique value you are bringing to this wonderful world.
Yeah, no, thanks for having me, Andrew. So for me, it's all about transparency. There's a lot of I would say fluff around the trading, the industry. And of course, there's a lot of information. I don't think anyone is starved for information. I think it's more so not only just information for information's sake, but actually having it being proven, tested, and verified. So my unique proposition is, look, everything I do, everything I take, wins, losses, everything is and has been effectively shared with the world. And it's a tough gig, but for me, transparency is number one. So that's how I differentiate myself. I want to help people, but do so with a proven track record. Make sure that people understand that, look, there's a lot of noise out there, and to really actually put your neck out there, have skin in the game, that's big, and that's not as common as many people might think in this social media day and age of trading.
Mhm. And is that how are you displaying that? Are you doing that through a program, a system, or are you displaying it? Are people copycatting, or how does it work in the way you get transparency?
Yeah, great question. So for me, all my trades, every single one, for my community, membership community, they get access to everything in real time. So they know my entry of what stock, and I don't trade illiquid stuff. I don't trade like anything that's, opaque. So for me, it's all large caps, enough volume, enough liquidity. They know my entry price, they know my thought process around the trade. And of course, also when I exit,
Mhm.
right? So if people to literally log everything, they can see I log it for myself, but even if someone were to just come in and take a look and see, okay, he entered here, exited there, they'd be able to see that one. Number two, I not only show my P&L for a trade, but also my total account. A lot of people cherry pick, maybe if they're trading options, these nice big triple digit winning percentages. But then they won't show, maybe the five duds that they had. And maybe those five losing trades were even more than whatever they made in that single larger percentage gainer trade. So it's very, I would say, for lack of a better word, sketchy. So for me, I don't just cherry pick and share a specific trade. I share the trade, whether it's a win or loss, in terms of not only just screenshots, but video as well, to directly off my platform. In fact, I've been gone on record to be so transparent, and this is bad. I keyword is used to, I used to share my account number for my brokerage so that people, the reason I would do it is because I know in this industry, I've been around a long time, people would have two accounts, and what they would do is they'll take, in options terms or stock, maybe they short the stock in one and then buy long the stock in another, and then they'll show whichever one they made money in. You don't know, it could be the same account, different account, but it's the same brokerage. So for me, I went as far as to even share my account number to keep it so that when people see my P&L, people see the account value, because I risk my real capital. They can see it's not a demo account. It's not a paper trading account. They see me in the video, and they could see the account number. I used to do that up until a year ago, or actually 2 years ago. I still share everything, but without the account number, because I had a little bit of scare in the middle of the night. I got like a notification, my phone was going off, and I'm like, why is this like two-factor authentication going off? Why is there like all this stuff going on? Why am I getting like, can you confirm where country? My brokerage is letting me know that someone was trying to access my account. And with that brokerage account, the username is the account number.
Mm.
Someone, one of my followers, whoever, right? There's everyone who knows, you never know. So they were taking that account number, putting it in, and then maybe trying passwords, not realizing maybe, maybe this guy will just authorize it, whatever, maybe some lapse of judgment and to be able to get
Mm.
in. I don't know what they would do, but so for me, I realized even transparency has a cost.
Yeah.
So when I say and I know, because it was crazy when I would share this, people will be like, Riz, like, are you crazy? Why are you doing this? And I'm like, no, I know, I understand the risk. I'm doing it for the greater good, or my
Mm.
mission, so to
Right.
speak. But of course, that was when that happened, it was a bit disheartening, but I mean, what do you expect, right?
Yep.
Like if you're
Right.
gonna kind of invite that. But anyways,
Yep. Transparency.
yes, that's my key. That I
Got
live
it.
and die by that. That's my number one differentiator, and that's ultimately for me and my values to live up to.
So now it's time to share your worst investment ever. And since no one goes into their worst investment thinking it will be, take a minute and tell us about the circumstances leading up to it, and then tell us your story.
Yeah, so it's funny. It's kind of odd that the time that we're recording is right now, Andrew. It just matches up with what's going on with the whole meme stock fiasco right now. I don't know if you're paying attention,
So
but
so
just
so let's
literally
just
just this
let's
week.
so it's
Oh,
it's May 16th,
yep.
2024. And just recap to the world what's happened with meme stocks and GameStop and all that.
Sure, sure. So on Sunday, whatever that was, the 13th or 14th, sorry, the 13th or 12th of May 2024, Roaring Kitty, DFV, that internet personality, the Wall Street Bets Reddit type of um person, obviously an international phenomenon to an extent. He effectively posted on Twitter for the first time, and it wasn't anything specific or substantive. It was just a picture or like of a meme, like of it's kind of a gaming meme where he's sitting on the chair, and then there's like an arrow, and then now he's leaning forward, meaning he's locked in. So that was it, and it's crazy because GameStop had already started moving up the week prior, but it's so wild that he posted on Sunday, and then now we're 3 days in. Um, the stock has just gone absolutely bonkers, about 300% gain. Um, and it's funny because the time, if we rewind to this, my biggest losing trade, so to speak, was around GameStop, and it's just so crazy that I'm having. Remember, we booked Andrew, full transfer. We booked this call, this interview weeks ago, right? Maybe even a month ago,
Yep.
and I'm literally just crazy because we're just dealing with this trade today. So it's kind of deja vu. It's a similar kind of trade actually, which blows my mind because I was thinking about this and I'm like, I have an interview, I have a meeting with Andrew, and look at what's transpiring, and I'm going to be talking about literally almost the exact scenario, but from 3 years ago. So to get into it, my biggest loss was back in 2021. So a little over 3 years ago, and as everyone should have expected, it was on GameStop. Now people will probably think, well, GameStop, like that thing went up 500%. Like, it was going crazy, and all of retail and obviously even institutions piled in to take advantage. How do you lose money? Like you bag held, you just bought and then just held through it. No, I took the smart money approach, and I decided to effectively bet against the stock going above a certain ceiling. So I'm not going to get into the complexities for your viewers and whoever, and I'm sure they know, but just for a broader audience to understand and for the sake of time, I was essentially saying that the stock at that time pre-split. The stock price split 4-1 or something over the past year. But I was saying at that time, it's going to stay below $300 per share. So it already run up to 300%. Okay, GameStop, it already gone up. And I will remind people this was and still is a pretty much, a massively, I would say, disgruntled business that is still, not in any great shapes or form, even after the past, 3 years. So anyways, the point is, I'm like, all right, this stock is like, it was literally on the verge of bankruptcy, massive cash flows. I know, like Andrew, you know the details about
Mm.
this from a valuation standpoint. This is your forte. So even for someone like me, who's not a valuation master, a specialist, but even I know a bit, and I knew that, okay, this is unsustainable. Like, someone's gonna get hurt, someone's gonna get damaged. So I'm gonna come in, I'm gonna say, look, I'm gonna put a ceiling on this. I'm gonna say, if I want the stock to stay below 300, reasonable. It's already gone up to 300%. So from a probability standpoint, it's very, very rare. And, utilizing standard deviation, saying that it's going to go up 300% and another 150, 100% after that. Remember, so I was like, all right, the numbers are on my side. The probabilities might have been like 99, maybe 99.5% in my favor. But that's the black swan event. What happened was I loaded up, so I shorted call options, naked call options. And I know people are gonna be like, "Oh, you had it coming." No, the rationale was that, look, like I said, probabilities. I wasn't shorting it directly. I wasn't shorting the calls when it was like $50, and then I was just carrying. No, it had already gone up,
Mm.
and I'm like, okay, this makes sense. So I loaded up a little bit, nothing substantive. Okay, I left enough room. I'm aware of the risk of, theoretical unlimited risk of shorting the call options. Now, what happened was, I will never forget this. It was in after hours, and the stock's gone up 300% already. It did go up to around $500 per share high. It went from 300 to 500 in about 2 days. And that day it went to 500, and after hours was the day Elon Musk on Twitter, again, Twitter back then, said game stonk. Okay. When he tweeted that in after hours, I still cannot fathom this kind of move off of a tweet. Again, remember, this is the first time anything like this has happened from a meme stock, Wall Street bets, pump, stick it to hedge funds. And this is not precedent. Remember, even
Mm.
for someone like me who at this time, had been doing it for 14 years. And correct me if I'm wrong, but I don't think there's ever been this kind of retail driven raid or this massive coming together. The only thing I can think of in the real world was maybe Occupy Wall Street back in 2008, 2009, but that was in the real world. They just, were protesting with pickets. Nothing from a,
Taking
okay,
money
let's
away
all
from the
buy.
institutions. They weren't doing that.
Yeah. And even that was a dud, because like it just, people stayed for a few days and then they went home. This was like this concentrated, like,
Attack. Yeah.
attack on funds. And I get it. I'm like, okay, great. I get the notion behind it. I get the rationale behind it. But anyways, I was like, all right, it's fine. It's no, this is ridiculous. Like, I'm coming in. And then, like I said, when Elon Musk tweeted, I knew at that moment, when the stock went up like another 100% after hours, I I knew, for lack of a better word, that I was in trouble. So that night, I remember I had to get some groceries. Again, I've been doing it for 14 years. Remember, I started at 16 years old. I started in 2008, just before, Lehman Brothers, Bear Stearns. And I remember, imagine being 16 and I still remember those names,
Yeah.
right?
And
Lehman, Bear
and
Stearns, like,
one question I have for you is, in after hours, could you do anything about the trade, or you had to wait? Yep.
I couldn't do anything. It was an options trade. So that's a good question. I'm sitting there already knowing the calculation of where my P&L will be next day, what my account value will be next day, because, once the stock price, when the option's in the money, I can just see from an intrinsic value, like, it doesn't, I don't even need to look at the numbers and,
Mm.
and mind my crudeness. I just knew I was screwed, for lack of a better word. So I had to literally wait. So options market opened at 9:30 a.m. Eastern, New York time. And I remember going to get groceries. I was like miserable. And I went in the parking lot for the grocery store. don't worry, I didn't cry, but I just sat there. I just sat there because I knew this is going to be a big one. So
Mhm.
what I can tell, your listeners and watchers is, and I in fact transparently shared this in video. Again, not a cherry pick screenshot or anything. Actual video of my platform. Look, guys, this is real. $160,000 loss on a single trade, and that transpired in 2, 3 days. So a span of 2 to 3 days went from, okay, yeah, I have my cap here. This is where it's going to be. Probabilities are 99% in my favor, to just absolutely getting blown out of the water
And
with that.
how
I
did you
didn't,
close? You closed the trade first thing in the morning, or how did it end?
yeah, how it ended was I had to close. I had to close because what happened was this move was so unprecedented. The brokerages changed the margin requirements. If you remember, like they wouldn't allow you trade it. The Robinhood, they like taking the buy button away. I was like, fine, go ahead, take whatever away, but I'm already in this trade. So for me, I couldn't close it regardless up until 9:30 a.m. So eventually I had to bite the bullet. It went
And
up
there
to
was
five
there's
dollars a
enough
share.
liquidity, or the ability to actually exit. You wasn't hampered by the price
No,
movement, or okay, so you could
no,
just
there
exit.
was no liquidity issues. There was way too much liquidity in that options chain in that stock because everyone was just buying options, not realizing like when you're buying options with such a high implied volatility, it's so expensive. So I was trying to be the smart money. I'm like, I'm going to short the option. I'm going to collect the
Yep, yep.
premium.
Yeah,
Um,
the reason why I ask is sometimes when you have a stop loss, let's say that you're expecting, you're protecting on the downside, that sometimes it can below, like I
No
had a,
stop loss.
yeah,
Yeah, no stop loss orders, as you know, in after hours. You can
yep,
have, no stop loss orders, you can have limit orders, but options do not trade
yep,
in after hours. So
yep.
that's why it's key that I point out that it was an options trade. So it's not like I saw the tweet or like the moment it started going up, I could exit. No, I was just sitting there and I'm just along for the ride.
So how did you
And
feel when you closed the trade?
I felt pretty horrendous because I'm like, it's not necessarily the loss. To me, the numbers and the circumstances, and I look back and I'm like, it was a black swan event. I'm not
Yeah,
making excuses for it, but it was a black swan event. I hated myself for so long because I'm like, how could I do this? Like I've spent 14 years at that time. Um, it's been my entire adult life that I've been doing this.
yep.
And I'm like, how could I make this mistake? Like, how could I size into this? But then I realized, no, I'd done the proper sizing. I just never accounted for something that's up 300% in a span of a few days to double again.
Right.
And of course, when you have options, and I didn't expect, Elon Musk of all people, again, he didn't own Twitter/X at that time, but he was obviously still really big. And the moment he tweeted that, I knew, all right, Elon, thanks. Um,
So,
I'm out. I knew that I'm done at that point. So luckily, I didn't blow up my account. Contrary to belief, I know a lot of traders, they have this thing where like they blew up an account. Knock on wood, I have not blown up an account. But
mm,
it was a big drawdown. It was a big hit. I didn't trade for like I think a few days,
yep,
which I know it
yep.
doesn't sound too bad, but for me it was a big thing. I didn't even look at markets. I'm like,
So
I can't even look at this.
how would you describe the lessons that you learned?
So what I learned from that is when you are shorting calls, naked calls, that strategy can work. If you have enough liquidity, it's fine. But when it comes to meme stocks and all these things, at that point, that new term stuck. Like there was no term called meme stock pre-January, February 2021, period. Now it's like, oh, it's a meme stock or it's GameStop, it's AMC. None of that existed. So I'm like, look, going forward, I will never let that happen to me again. Um, and I had to learn a lesson that look, black swans happen. Anything can happen. The
Mm,
world that we used to trade in 10 years ago is not the same that it is a few years ago. You can look back any time frame and it's always rapidly evolving. We know that. So that was a lesson I learned. I'm like, look, sometimes the math, the probabilities, everything can make sense and you can still end up being wrong. And that's literally a lesson for life. You can do everything right. You know what? Like, you know how they say, like, there's been people out there that have jumped out of an airplane, gone skydiving. They've got their parachute. They've even checked the backup parachute. They've had thousands of dives in experience. It's just maybe the latch is faulty. It's just
Mm,
one thing, and you can't control every aspect. This is a normal aspect of life. So it was a tough lesson, not something that I eventually like. It wasn't my undoing. I
mm,
eventually bounced back. I came back with a vengeance. I tell people again, this is not, I'm not condoning this, but when I'm angry, when I'm like, you know what they say, don't trade on emotions and whatnot. But for me, I get in this mode where I'm like, I have a vendetta. Uh, and again, I'm not condoning this kind of trading, but I have a vendetta. And I'm like, I'm gonna make this back, and preferably I'm gonna make it back trading GameStop. So what I did was if for those that don't remember, GameStop continued to be volatile throughout that year. It eventually faded. It eventually had dropped. It lost 80% of its value, but I kept trading it in a sense, knowing what could happen, and I was just convinced. I'm like, I'm gonna make this money back. I eventually did make it back in a reasonable frame of time, not in the next day or next week, but I did make it back in a reasonable amount of time, and I'm like, if I can make it back on these meme stocks, that's going to set me at ease. Again, not condoning this, not saying you should revenge trade and emotional trade. It was just something for me I knew with all the years of experience how I am and how I'm wired and how I operate. Uh, that if I execute correctly and properly, you win. It's like at the casino, right? Yeah, the house loses sometimes, but over a large enough sample size, they come out ahead. That's called
yep.
edge, right?
Yep.
So I knew my edge, and yeah, it's funny that here we are now. And I did the same trade, but Andrew and all the listeners and viewers out there ended up being very profitable. Again, the stock was down today. It was kind of pumped up and then it just tanked. Um, so I'm good.
It,
It's just crazy how it came
yeah.
back full circle.
Maybe I'll share my biggest takeaway is the idea that black swans are going to happen. And now, of course, you were playing with fire, right? You were playing in a very volatile space.
Yep.
And so uh, I think black swans can happen, they can happen anywhere, and black swan meaning an extreme event. You can look at something and say, oh, if that was to happen, it would be a 10 standard deviation, event. The probability of that is, 0.00001. That doesn't mean the event can't happen. And
So,
it just means that the probability of the event happening is low, but it still can happen. And so the result of that is that so the way to handle that from an investing perspective is, the first thing is to make sure you're diversified. So you don't want to be, into something, uh, and that's the only thing you got, because if a black swan event happens there, boom. But just because you invested, diversified across, let's say, particular stocks in the US stock market, doesn't mean that we couldn't have a black swan event in the US market and it, collapses by X in a certain number of days or something like that. So, there's all kinds of things. So just to keep in mind that black swans can happen. You want to prepare yourself as much as you can to reduce risk in all other areas. But I would say probably, the fact that you didn't bet your whole portfolio is, part of the evidence that your protection against black swan was to, control the amount that you're betting on any particular position. So is there anything you would add to that?
no, you're right. Absolutely. Like you said, diversifying is key, not only individual stocks, but different sectors, industries, and of course, as you mentioned, geographically as well, right? Like you said, just country risk, systemic risk. There's all those kinds of things. But yeah, this was not one of those things. This was just, when I think back, just wild. Um, but I'm glad, I went through unscathed. I know there's some people that must have. I'm not the only person,
Hmm.
who thought about this side of the trade. We know Melvin
There's a lot of
Capital.
blood on the streets around that
Yeah, there
trade.
was blood on the streets. There was actually funds that went under, massive drawdowns, and there's people that got hurt on both sides, whether it's
Mhm.
institutions, whether it's people that tried to bet against it outright. And worst thing was I've been around, I've seen so many people come and go in the trading space, um, and a lot of people, I think the net result of all this meme stock pump was a detriment. I think because a few people, of course, they made money. They made a lot of money in a really short amount of time, and some people just made a bit. But I think the vast majority of people actually ended up losing money because they believed in this kind of thing and not realizing that you actually have to take gains to realize. And you as an individual trader, and maybe even 100,000 of you with your, $1,000 account or $10,000 account, you cannot fight ultimately the market. You cannot fight large institutions
Yep.
and the money flow. So a lot of people had to learn this harsh lesson. And once they saw this, I think they lost faith in the market. They're like,
Mm.
oh, it's rigged. Oh, you can't do this, or they're taking the buy button away. You can, there's like 200% of the float is short. Like they lost faith in the market. And I
Mm.
saw this transpire. It was like this deep distrust of the system, right? And it's for me as someone who's been around, like I've said, for a long time, who's seen the ups and downs to markets. It was very disheartening because a lot of people got turned off and they will never participate in markets again. Maybe the
Yep.
only participation they ever had was because of GameStop, and that was full stop. That's it. You know. Um, so
Yep.
it's sad. It's sad because I've seen that the financial markets for me, and for many people I've coached and trained and helped, can be a force of good. Of course, from a business, from capital, like all these companies that we see, but even from an individual way, if done right, it can be a source of growth, not only on a personal level, but of course financially,
Yep.
right?
Yep.
So just like anything, even water, if you have too much of it, it can be a bad thing.
So based on what you learned from this story and what you continue to learn, what's one action that you'd recommend our listeners take to avoid suffering the same fate?
Yeah, I would say, look, like you said, avoid being in trades that may be a bit more complex or maybe above. Um, I knew the complexity of the trade. It wasn't that, but I did see and still see people entering trades they don't fully know, maybe because of a narrative. My thing is, no matter what, yeah, some influencer is saying, be skeptical, do your due diligence. It's easy nowadays to fall prey. And I noticed that a lot of people are waking up to this, that like, okay, what's the person who's saying this? What's their agenda? Right?
Mm-hmm.
Back in 2020, 2021, people were like, had more time. They were on their phones more. They were at home mostly. So, things have changed. But I would say question, do your due diligence. Again, all the basic standard stuff, but don't mess with things that may be a bit outside of your purview.
Okay. And what's a resource you'd recommend for our listeners?
Yeah. So for me, again, I don't want to do a forceful plug, but I have my website, rizinternational.com. Of course, there's so many resources out there. But for me, I can't vouch for what's out there. I can only vouch for what's mine. Obviously,
Mhm.
Andrew, your work as well. But for me, my job, and I'm very hands-on. So for me, it's like if someone reaches out to me, even someone messages me on Instagram, they're surprised that I respond back right away. And they're like, we didn't expect that. They asked me a question, and for me, it's a labor of love. So whether it's my social media or website, whatever way it is, if people have questions, they want to know something, I'm always there to help.
Great. So last question, what is your number one goal for the next 12 months?
This, of course, to beat markets again. This will be my 11th year beating markets consistently year after year. So I'm
Mm.
hoping to keep that streak going. Again, knock on wood. Uh, that's my number one goal in markets. Always outperform, because if I don't have an edge or if I'm not executing on it, yeah, you can have, down years, lull years, but for me, it's beating the market. Is always that top of mind. Um,
Mm.
so far, so good.
Great. Well, listeners, there you have it. Another story of loss to keep you winning. Remember, I'm on a mission to help 1 million people reduce risk in their lives. As we conclude, Rizwan, I want to thank you again for joining our mission. And on behalf of A Stotz Academy, I hereby award you alumni status for turning your worst investment ever into your best teaching moment. Do you have any parting words for the audience?
No, manage risk, enjoy the process.
Great advice. And that's a wrap on another great story to help us create, grow, and protect our wealth. Fellow risk takers, let's celebrate that today we added one more person to our mission to help 1 million people reduce risk in their lives. This is your worst podcast host, Andrew Stotz, saying, I'll see you on the upside.